At the opening bell this morning, 911.5 million SpaceX shares became eligible to sell. At Thursday's prices, that represented roughly $101 billion of stock. It more than doubled the number of SPEX shares that could potentially trade. Every simple supply and demand story said the stock should collapse. Instead, after dropping early, SPEX reversed and closed at $114.92, up more than 6%. That is not normal, and the reason matters for every SpaceX investor. First, an unlock does not mean 911 million shares were dumped into the market. It means employees, early investors, and other insiders were legally allowed to sell up to that amount. We do not yet have filings showing exactly who sold or how much, so the responsible conclusion is not that insiders held every share. It is that the market absorbed the supply that actually appeared far better than traders feared. Before today, only about 639 million shares were in the public float. The unlock raised the potential trading pool to as many as 1.55 billion shares. That is enormous because the June initial public offering sold less than 5% of the company. Until now, SPEX traded like a giant company through a very narrow doorway. Today, that doorway became much wider. The first reaction looked bearish. SpaceX fell as much as 2.9% early in the session. Then, buyers took control. By midday, more than $23 billion of stock had changed hands. SPEX ultimately closed up 6.14%, one day after an earnings-driven decline of roughly 14%. The unlock did create volatility, but it did not create the one-way selling event many investors expected. The first explanation is positioning. Data cited from S3 partners showed short sellers had borrowed and sold roughly 35% of the available float. That is a crowded trade. When a feared catalyst arrives and the stock refuses to break, short sellers may buy shares to close their positions. That buying can overwhelm the incremental supply coming from insiders. In other words, the unlock was real, but so was the fuel for a short covering reversal. The second explanation is that investors had weeks to prepare. SPEX was already more than 50% below its June peak before the unlock, and Wednesday's post-earnings fall added another sharp reset. Analysts noted that funds had been repositioning ahead of the event. The key point is simple. A stock does not rise because the news is good. It can rise because reality is less bad than the price already assumed.
Here is the detail most headlines missed. Up to 455.8 million additional shares did not unlock. Their release depended on a price test. SPACX needed to trade above 30% of the IPO price, approximately $175.50 on 5 of the 10 sessions before earnings. The test failed. The strange result is that the stock's weakness prevented another major wave of supply from arriving today. Today was only the first stage in a 9-part release schedule. Sources disagree about whether the next 319 million share tranche arrives on August 12th or August 20th, so treat the exact next date cautiously. What matters is the shape of the calendar. Roughly 700 million more shares may become eligible in September, with another amount near 700 million in October. By December 8th, restrictions are expected to have lifted on enough shares to make roughly 40% of the company potentially tradable. The remaining 60% stays locked longer. Elon Musk's approximately 6.4 billion shares remain restricted until June 12, 2027. So today's gain does not erase the overhang. It simply proves that the first wave was absorbable. For bulls, today's action is encouraging. The market faced a historic increase in potential supply, heavy volume, and a crowded short position, yet the stock finished higher. Eligible shares are not automatically offered shares. If long-term employees and early investors sell gradually rather than all at once, demand may continue absorbing each tranche. Clearing the lockup calendar would eventually let investors return their attention to Starlink growth, Starship execution, defense contracts, and cash generation. For bears, one strong session proves very little. Many insiders have held SpaceX shares for years at a fraction of today's price. They have rational reasons to diversify. Analysts expecting persistent pressure point to the repeated releases through December, not just this first day. A short squeeze can lift a stock temporarily, while the underlying supply problem remains. If volume fades and each new tranche meets weaker demand, the overhang returns quickly. My takeaway is that SPACX is trading on 2 clocks. The long clock is the SpaceX thesis, Starlink economics, Starship costs, launch dominance, defense revenue, and enormous capital spending. The short clock is pure market structure, unlock dates, available float, short interest, and daily volume. For the rest of 2026, investors need both clocks on screen. Today's result was bullish, but it was only stage 1. Subscribe to SpaceXInvestor for the next unlock, the next launch, and the numbers behind the headlines.